for a business opportunity. My name is Zaheer Anwari. I'm a senior member of the dynamic trader community. I've been trading since 2007. We're trend traders, so we don't day trade, we don't scalp. It's very much a long-term. We very much trade from a long-term perspective, where we're looking to hold positions for weeks to months, not just minutes, not just hours or a few days. We're really looking to hold positions for weeks to months. So what this means then is that we only need to take a few trades a year, and by holding these positions and compounding, it's very much a case of doing as little as possible for as much as possible. So less is very much more when it comes to trend trading.
Yeah, you got it. Yeah. So we've already kind of gone over our personal backgrounds in the first two Blabs that we did. So if anyone missed those, they're available on the Escape the Rat Race YouTube channel. And if you subscribe, actually, let me just pop this link here quickly for everybody, because if you just simply drop your, let me just pop this link that I'm just posting in the chat box, everyone. It's just a bit.ly link there. So bit.ly/trading_Blab. That will just take you to a page on the Escape the Rat Race website. And you can just drop your name and email address in there. And what that will enable me to do is send out all of the replays over the coming weeks, so you don't miss anything, and also all of the video tutorials that we'll be putting together, and also the PDF documents as well, which go into a lot more detail. So really, it's a really comprehensive guide to trend trading, completely free. Just drop your email address into that link there that I've just posted, and you won't miss out anything. So I've just dropped that there for you, and we're kind of going to chunk these into different aspects of trend trading, aren't we, Zaheer? And tonight we're specifically going to look at the trading bias. So would you like to just explain what we mean by the bias there?
Yeah, sure. So basically, as Chris has said, the first few Blabs, I feel like saying Periscope because I've been doing Periscopes quite a lot, but I should say Blab. The first few Blabs were about sort of our journey into trading. Moving forward, we're going to get quite technical. So there are going to be new terms that people haven't heard about. There'll also be terms that people may have heard about, but might not be 100% sure on what is the correct way to use them when it comes to trading. There is a lot of information out there, and some of it's quite good, and some of it's very much misleading. So through these Blabs, really hope to clear that up, starting with the bias pretty much today, which is what we're really going to be focusing on is how to establish high probability environments in the market. Entry points seem to be the main focus for a lot of traders when they first come to trading. So, breakouts, pullbacks, bounces off moving averages, there's many ways to enter into the market, but has there been a lot of thought really gone into where that exact entry point is? And then once you actually have found that entry point, what's the next stage? How far is that entry point going to take you? Are you working on a one-to-one ratio, or are you looking for a trend to establish itself up over weeks to months? And as trend traders, that's what we want. We want to find an entry point into a market, but we want to see that then develop over months. And so what we're looking for are high probability environments, not just an entry point, but high probability environments where a trend can develop. And that's pretty much what we're looking at today, which is the bias.
Sure. And in terms of the markets that specifically we're looking at, trend trading, really, once you understand the methodology, it can be applied to all markets. But we tend to focus more on Forex and US stocks. And why is that, Zaheer?
Well, the most liquid markets, ultimately. So, that's what we focus on. Trading is about making money. And, we want to be where the money is. And so foreign exchange, US stocks, and then, of course, commodities. They're the three main markets that we focus on. And, as money is moved from market to market. So, we don't just focus on one market, because from your experience in 2015, it was pretty quiet, right?
Yeah, absolutely was. Yeah.
Yeah. So, we had to be aware of where the money was potentially in the other markets. But 2015 was quite a unique year, because generally when one market's in trend, another market's in consolidation, then that market goes in consolidation, then another market goes in trend. 2015, both US stocks and foreign exchange were in consolidation, pretty long period of time. So, that's where patience comes in.
Yeah, absolutely. And thankfully, we're seeing some movement now, certainly in Forex market. And there's been some trading opportunities. And I believe we've both got positions open at the moment in Forex. So that's encouraging and a good start to the year. And and we've said this before, but it's really worth impressing the point that when you trend trade, you only need 3 or 4 good trades or good trends, should I say, a year, because the profit you can make is substantial. So we're not looking to be in and out of the market on a daily basis and taking 20 pips here and 20 pips there. That's just not the way we do it. As you've said, we look at longer time frames, and that enables us to choose our positions carefully based on criteria, which we'll be going through over the forthcoming Blabs, and really ride those trends for a long period of time. And that can be several months. And that will return us many, many thousands of pips. And that's the difference, really, what we're doing here with trend trade, as opposed to a shorter time frame like hourly or daily.
Yeah, exactly. I mean, there's a lot more benefits that come with long-term trend trading. It's not just monetary, but once you grow an account size that you can sustain a lifestyle on, you've then also got the empowerment of your own time. If you're trading in front of the screen takes 15 to 30 minutes a day, maybe an hour of preparation at the weekend, it's just very, very little work for complete control, really, of all aspects of your life. But to get to that stage, people need to really take a step back and focus on the finer details. Everyone's looking for a way out of the system. Unless you're going to create the next multi-billion-dollar app, such as Instagram or Snapchat or whatever, or unless you're going to come up with the next, product that everyone wants, like these skateboards that everyone's on at the moment with the wheels. I forgot what they call now. I'm getting a bit old for that, aren't I? I can't remember names.
Hoverboard.
Hoverboard. Yeah, I remember watching them Back to the Future. They're a reality now, aren't they? But being serious for a second, unless you come up with one of those apps or one of those products, there's no better way out of the system than through trend trading. But to get to that stage, you've got to give it the respect that it deserves, which is understanding how it works, and obviously then the time to be able to grow an account. It doesn't take forever. That's the beautiful thing about trend trading, but still need to give it that time. There's no such thing as a get rich quick scheme. So, to move things forward, the first thing that we need to understand is timeframes. And maybe, Chris, you can talk a little bit about this. What are the 3 main timeframes that we focus on are the monthly, the weekly, and the daily.
Yeah, correct? That's correct. Yeah. So when we go about our analysis, we have a simple setup. It's worth mentioning the software we use, because we use eSignal as our charting software. Very, very good software. Highly recommend that you use good software. You don't go for the cheap stuff and the free stuff, because it's just not worth it. At the end of the day, you have to understand that trading is a business, and you really must approach it like that, even though it only takes up a small amount of our time each day. And that can be as small as 15 minutes or 20 minutes. It still needs to be treated as a business, because you have expenses and you'll have profits. So one of your expenses is the software, is the equipment you use. And that's a minimal cost, because we're trading from home on our personal computers. We're not paying for offices and staff, So a cost of good software for like £50 a month, it's nothing, So it's worth mentioning that we use good software.
You could push it to £150 a month, even, as an overhead of a business. Having software that costs you, let's say you're paying £150 a month for the software, but it's essential. Software is essential. I mean, here at Dynamic Trader, what we teach people can be replicated in free software. Something like maybe TradingView. It can be replicated, that because we train people. We don't. It's not a black box system that we have here. All our members understand the logic behind our strategies and the way we break down a chart. It can be replicated, but what takes us 15 to 20 minutes with eSignal and the Dynamic Trader tools that we have that have been developed over the last 10 years at a lot of expense. the time that it takes up, 15 to 20 minutes, if you're using free software, it'll be taking you hours. It'll be a 9 to 5, potentially even longer. Okay, so yeah, good software is really, really important. And we look at the monthly, the weekly, and the daily time frame. I'm using my iPad here a little bit, so I hope you can see that, just so that you get an idea. So basically, ultimately, that's kind of what our screen would look like. So down the left-hand side here, you have our watch list. So this is where we have our currencies and our stocks all listed. Across the top, we would have the monthly chart. And then in the bottom left, we'd have the weekly chart. And in the bottom right, we'd have the daily chart. So ultimately, that is what our typical screen setup would look like on the computer. Yeah. And that would be the same whether it's foreign exchange, stocks, or commodities. It's just that this list would change according to which market we were looking at.
Yeah, brilliant. Really well illustrated.
To take that one step further, what we would have on the monthly chart are support and resistance. And on the weekly and the daily chart is where we would look for trend, direction, and bias. So the monthly is where we would see where, levels, potentially that price could move either to the upside or to the downside. How far could price move towards? That's all on the monthly chart. The support and resistance levels, most of the time when people first come to trading, the support and resistance levels are usually drawn on a lower time frame. Yeah, and you can probably relate to this, when you first started day trading, Chris. You were drawing support and resistance on maybe an hour time frame, maybe even less.
Yeah, it was around the hour, 4 hour. Yeah. Very time consuming, and it just makes life hard work, And as trend traders, we, not that we're averse to hard work, but why make things harder than they need to be,
Exactly. You've got a lot more candlesticks to deal with. You've just got a lot more intraday noise. If you're on the hour time frame, that's 24 bars in a day.
Yeah.
And on a daily chart, that's just one candle. So when you come to 24 bars, what are the strong levels? What are the weak levels? There's all of these questions that just adds confusion. By drawing your support and resistance on the monthly chart, you have very, very clear levels where price has reversed, or if it breaks a level, where is the next level? The monthly chart gives you that. The weekly and the daily, which is where we're going to kind of go into detail in today, is where we look for trend, direction, and bias. So the weekly and the daily will tell us whether we're going to be going long between those levels of support and resistance, or whether we're going to be going short between those levels of support and resistance.
Yeah, that's it. So let's get into that then. We talk about bias here, and when we talk about trading bias, it's very simple. It's one indicator, and that is specifically the 200-day moving average.
Yeah, which you can see right here. Okay, so can you see that?
I can see that fine. I think that's great. Just a little bit high. That's perfect. Yep.
So what we have is the 200 moving average, which is the black line going through the center of my iPad. Now, the logic behind the 200 moving average really comes from before the internet. This is the thing, the internet is a great, great, great invention. It's a great invention. But with the internet comes certain pitfalls. And, because of the internet, a lot of traders have been sent down the route of day trading. However, if you go back to before the internet, everything was drawn by hand. And so because everything was drawn by hand, traders were very, very particular about the information that they had on their charts. The 200 moving average was proven to be a very good indicator of the long-term direction of the trend. Okay, so what does that mean? That means that basically when price was above the 200 moving average, it had a bullish bias, or we were in a long-term bull market. And this is when we would limit ourselves. This is when we do limit ourselves to long opportunities. And when price is trading below the 200 moving average, this is when it's considered a bear market. And this is when we limit ourselves to shorting opportunities. We don't go against the bias. Now, if you go to the Dynamic Trader website, you'll see some time-lapse videos, which Javid has created. And there's one particular video, which I'm sure you could probably email out to these guys. Yeah. There's one particular video which shows you how long price will stay above the 200 moving average for. And, it can stay above the 200 moving average for months, even years at a time. So the 200 moving average is a very, very good indicator of the long-term direction of the trend.
Yeah, that's it. And I mean, you've summed everything up there, really. It's not something that's going to chop and change on a daily basis, an hourly basis. We don't need to keep checking our phones and our software to see, do we need to do something? It moves relatively slowly. So even at the end of every day or first thing in the morning, it's ample amount of time for us to make clear-headed decisions, because that's so important with trading, is the emotional side and the mindset. Something that really needs to be dealt with before anything else, because trading can have a lot of emotions, and when the timeframes are lower and you're seeing your account go up and down and price moving quickly, you can just lose your head. And we've seen it so many times with many people, and you make irrational decisions, and we don't want to do that. We want to minimize our risk, because we want to protect our account at all costs. It's number one is that we look at what's the maximum we can lose on this trade. We always look at that before we look at how much profit can we make.
Yeah, definitely. I mean, that's the difference between a good trader and a bad trader. If you've been focusing Miguel, if you've been following Miguel on Periscope, Miguel will have mentioned about how we always look at the downside, and we always protect our downside, because we know that the upside is going to take care of itself. The upside is out of our control. The downside is within our control. So we need to always maintain what is in our control and let the forces of the market take over when the profits are in place and when the trends are in play. Okay, which now leads me on to the next stage. Now that we're talking about trends, so we've established how to decipher the bias in the market. So we use the 200 moving average. When price is above the 200 moving average, it's a bull market. When price is below the 200 moving average, it's a bear market. Now, what we also need to do is understand how to establish the trend, because the bias and the trend are generally two different things. And this is something that people do sometimes get confused with. The bias really tells us the long-term direction. But within the long-term direction, you've also got short-term to medium-term trends.
Yep.
So we need to understand what kind of trend we are in within an overall bullish or bearish bias. Okay. So how do we do that? On my next page here, you see I've got a second blue moving average, which is the 50 moving average. Okay. So what we're looking for in a strong bullish market is for price to be trading above the 50 moving average and above the 200 moving average in a strong bull market. I haven't drawn the screen, but in a strong bear market, it would be the other way around. We'd want to be below the 200 and below the 50. Yeah. Again, you made a very good point, Chris, which is, sometimes that setup may take days, even weeks to happen.
Yeah.
It may break the 200 moving average, but we may wait several days before it breaks the 50 moving average.
Yeah.
In addition to that, we need to see this setup on the daily and the weekly time frame.
Sure. So anyone taking notes now, the key things you need to be writing down are that price needs to be above the 50 moving average and the 200 moving average for a bullish opportunity. We're not saying that that's a guaranteed trading opportunity, so please don't understand that, but we're saying we want to stack the odds in our favor as much as we can when making our decisions. Yeah. So just
thanks, Gavin. Jared made thank you. He's confirmed that I'm actually better at drawing.
I'm loving those charts that you've done there, Zaheer. I think they're brilliant. Really, really good way to illustrate things. And also, we should just mention that we haven't just made this up. The 200 moving average has been used for, hundreds of years, by all the financial institutions, the banks. It's a very, very psychological and important indicator used in trading. So thank you as well, Javid and Anne, for all of the high fives. And we haven't got hearts on Blab, have we? We've kind of got like high fives, and we've got loads coming from Anne and Javid. So thank you so much for that. But yeah, we should say that this is the 200 moving average is a really, really strong, important indicator. So we want to have those kind of tools in our toolbox and use those.
As a standard across any chart. When you understand this logic, you can open up any chart from any market in the world. You could even go to, I know Lucas is in today. Hi, Lucas. I know he trades Polish stocks, and he uses the same approach when it comes to Polish stocks. I'm not sure if Miguel trades South African stocks. I don't know if they're able to do that, but if he is, then he'd have the same approach. Okay, yeah, fantastic. So it doesn't matter which market you're looking at, which chart you're looking at. If you understand how to look at bias and trend, you can break down any chart.
Yeah. And you can do that in seconds. I mean, you can.
3-second rule. You should be able to, a good chart should scream at you.
Yeah. I mean, you probably have this as well, Zaheer, but when people know that you trade, they'll sometimes say, oh, what about this stock, or what about that? Maybe something that they're investing in, or they're looking to invest, or more often than not, it's one of those kind of rumors. Someone says, oh, you should buy this, or, I mean, you can take a look at that chart and you can say straight away whether, there's a good trading opportunity. And that's something that obviously you train your eye and you get better at with experience and training. And that's one of the benefits of being part of a community of people like we are with Dynamic Trader. So,
yeah, definitely. I mean, a lot of the times people take investments or make trades based on tips, if you like, or maybe, when it comes to Apple, for example, they may be seeing increased sales in a particular product or something, and they reckon that that's enough to then go and invest in a particular instrument. And then, when you pull up the charts in front of them, I know, for example, my uncle used to work for Tesco, and he came to me and he said that his Tesco stocks that he had as an employee weren't doing too well. And I showed him the Tesco chart. And of course, we were short on Tesco. Right? Yeah. But of course, as employees, they kind of guarantee to get their minimum money back or something like that. But, these it's all tied up for like a 5-year minimum investment, whereas when you start showing them how to do it themselves, it's just awareness, Chris. And this is what the dynamic trader is all about. The dynamic trader is all, it's about awareness, and B, it's about taking that awareness to the next stage and actually turning people into traders. I'm aware of the time, Chris, so I'm just going to quickly bring in the third point,
please do,
which we want to add to the bias, and that is the final point, which is looking at the high, the low, and the close of the previous year. Okay, so this is the third element that we need to look at when looking for high probability environments. So not only do we need to be above the 200 moving average, not only do we need to be above the 50 moving average, but we also want to look at where the highest price of the previous year was. So in this case, as we're in 2016, we need to look at the highest point of 2015, and we want to ideally be above the high of 2015. Mm-hmm. So at this point right here, let's say, for example, this point right here, we want to be above this point. We want to be above the 200. We want to be above the 50. That would give us a strong bullish environment. Mm-hmm. In a strong bearish environment, we want to be below the 200, below the 50 moving average. And we also want to be below the lowest price of 2015.
Absolutely.
If trading within these levels, if price is trading between the high and the low, we generally consider this a range market. And this is an environment that we don't want to be trading in. So we could be above the 200 moving average. We could be above the 50 moving average. But if price is trading between these levels, then we don't take the trade. We need to see price move above the high of last year. Then we can start looking to go long.
Yeah.
Okay. So in summary, on the next page, I've just written here.
Love it. Love it.
A strong bull market. Sorry, I'm going to just take my face off, right? Strong bull market above the 200 moving average, above the 50 moving average, and above the high of 2015 or the high of last year. In a strong bear market, we want to be below the 200 moving average, below the 50 moving average, and we want to be below the low of 2015.
Yeah.
Once we've got these three environments, we can then be confident that we're in a high probability environment. Mm-hmm. The next stage then, of course, is to find the exact entry point.
Yeah.
Okay, and that's, of course, is going to be a topic for another blab.
Yeah, absolutely. And we want to keep these blabs kind of bite-sized and really just focus in on these individual aspects. But talking about the bias tonight, that's a fundamental aspect that you really start with. Simply, are you looking for long buying opportunities or short selling opportunities? That's really the essence of what the bias is helping us decide. And then we take the other steps in due course. And it's worth emphasizing as well that the 200 moving average it should be used really when entering a trade. We don't look at that when we exit trades because we have other stop loss management procedures in place, which again we'll be covering in later blabs. So this helps us. helps us to decide when to enter a trade, whether that be long or short. So as I say, there'll be I'll put together a visual illustration through the chart. So I'll log into eSignal. I will demonstrate this so that everyone can see exactly some live examples with some real charts, and it'll be really clear to see. And I'll also send out the video that you mentioned, Zaheer, with the time lapse that Javid kindly put together.
Yeah, that'd be great. So, I mean, that will really give a very good example of, and it's actually, the time lapse video is actually on some of the trades that we took. I think one of them was the Singapore dollar. I think maybe Javid, I don't know if Javid can confirm that, but I remember, I'm pretty sure it was a Singapore dollar, one of the time lapse videos, and it shows how we traded that. Yeah, it shows how we traded that for, it was a very profitable trade. I think back in 2011, if I remember correctly. Yeah. It's a very, very profitable trade. But, it doesn't matter what year it is, 2011, 2000, the logic's still the same. The markets have a rhythm that repeats, and that's all we do year in, year out. So, yeah, I think that's the trading bias pretty much covered. I hope that really makes sense to people. It's very simple. There's nothing complicated about it. I think the key here, and it's a really important point, is people need to learn to apply patience to their trading. And so what people are going to do now is probably go away, try and understand what they've seen in today's Blab, which is great. But then don't be put off by the fact that you have to wait for weeks to months at a time, maybe for a certain setup. That is why it's very, very important to have a big watch list. Yeah, patience pays, definitely. It's very important to have a big watch list because, say, for example, if you're looking at the euro dollar right now is very much in consolidation. We know that. It's been in consolidation for almost a year. And that is because before the consolidation, we went through a very profitable trend. It was about 8 or 9 months. Yeah. Very profitable short that we took. After every move, price goes into consolidation. However, while one currency is in consolidation, another currency is in trend. At the moment, we're looking at the US dollar, Canadian dollar. So, it's good to have a big portfolio. Don't let the fact that we have to wait for setups. Don't let that daunt you, because when they do appear, they'll be very profitable.
Absolutely. So thank you, Zaheer. I think that's hopefully given people a good insight into an understanding of the trading bias. Just before we go, Zaheer, I know you've been really busy doing loads of training over the last couple of weeks with the apprentice program. How's that going so far?
Yeah, very good. Yeah, very, very good. We've had some really nice, very, very, very interesting people in the community, and they all come from various backgrounds and from all over the world. That's the whole point of the community, really, is to bring like-minded people who have come from various backgrounds in trading and, personally, professionally, into one environment with the common interest of learning how to trade. And, it's growing nicely. Yeah. We've got some very nice people in there. The community's, taken care of by not just by myself, but Javid and Anne. We've got Miguel in there. We've got Colo in there, who people will know, Colo on Instagram. He's been doing his mentoring Mondays. So, there's a lot of people who are active on social media. So by joining The Apprentice, you'll actually be able to be around these people in a much more sort of intimate environment, if you like, and really get to pick their brains for very, very good information. So, it would be great to see more people in the community. I'm just going to put the link into the chat box, if that's okay.
I was just going to say, please do. And for anyone that's on Instagram and if you're not already following Zaheer, then you absolutely must go on your phone now, go to Instagram, search for fx.mentor. It's going crazy, just getting so many new followers every day. Some excellent, inspiring posts from Zaheer. Awesome. Just go and check out fx.mentor on Instagram.
I can put the web link up.
Yeah.
It's not the same as obviously follow me on the app, but people can get an idea of there we go. So I've got my web link there as well. So yeah, please please follow me. I mean, I've grown to almost 40,000 followers in about 7 or 8 months. So it's growing nicely.
Yeah. Brilliant.
Thanks, Chris. done an excellent job as always. Thank you so much for hosting.
No worries, no worries. It's a pleasure. Thank you to everyone. Thank you, Anne and Javid, for all the support, not just tonight with the high fives, but for everything, for all of the knowledge and wisdom that you provide us constantly, and to the whole Escape the Rat Race community and the whole Dynamic Trader community. Yeah, we look forward to speaking to you next time. Our next Blab will be same time in 2 weeks. So I don't have the date in front of me. Where are we today? We're on the 2nd. Yeah, so we're looking about where are we? 24th, something like that. So yeah, check us out.
Maybe the 16th.
Yeah, let me just post this link one more time for those people who didn't get the link the first time. If you would like to receive the replay to all of these Blabs, so not just tonight, but every Blab throughout the forthcoming few months, it will be the almost complete guide to trend trading. It will be supported by tutorial videos and PDFs, which were kindly put together from Anne Chapman, founder of Dynamic Trader, along with Javid. So everything you need to know, we will be going through in the forthcoming Blab series. So we look forward to presenting that, and we wish everyone a good evening. Thank you, Zaheer.
Thank you.
All right.
See you later.
Take care then.
Thank you.
Bye.
See you later.